Avendus Capital Public Markets Alternate Strategies is now very proud to launch India's first ESG fund. While ESG is still in its nascency in India, it is gaining increasing acceptance all over the world, with now almost 25% of AUMs globally incorporating ESG strategies. So what exactly is ESG? What kind of benefits do investors accrue from ESG investing? In order to answer these questions and to understand the way ahead on ESG in India, we had a conversation with Melissa Brown, who is the leading authority on ESG investing in Asia. Melissa has now been advising companies, advising clients on ESG for almost 15 years. She is currently on the board of Sustainalytics, a leading provider of ESG rankings globally. I was in conversation with Melissa on many of these facets of ESG investing, and here are some of the excerpts. Melissa, welcome to Bombay.
Thank you, and thank you for the extremely kind introduction.
Thank you. It's as I said, it's a privilege for Avendus to have you advising us. One of the things that I think we should look at, let's start from the beginning. Tell us about ESG. What exactly is ESG investing, and why are we seeing so much interest in this style of investing?
Well, in many ways, to be honest, the very best global long-term investors have for many, many years looked at issues related to environmental, social, and governance issues. What's really changed over the last 20 years is that the nature of our analysis of the issues, and quite frankly, the importance of the issues, has increased fairly dramatically. So what has really emerged over the last 20 years is a style of investing that builds on the very best practices that have always existed for the best global investors. But what they've learned to do is to augment the traditional financial analysis that's always been the bedrock of excellent long-term investing, and they've learned to augment it by bringing into focus the importance of relevant environmental issues, social issues, and governance issues that may change the arc of performance for companies and certainly for portfolios.
One of the most common perceptions of ESG is that it comes with a virtue discount. Investors have to forego returns, the perception says, in order to align their values with their investments. We asked Melissa her views on this, and we also asked her, what is the key objective of ESG investing? Is it alpha creation? Is it risk mitigation, or is it a little bit of both?
We've covered the full range of traditional questions that people quite rightly ask. And I'd have to say that 10 years ago, this community probably operated from the perspective of reversing the question and saying, why would you want to invest without the benefit into the environmental, social, governance performance of the companies that you hold?
Right.
But what we have now in addition is we have very strong data that's been developed, frankly, by a whole range of key players in the investment world over the past 10 years. And what we can see very clearly is that there's, first and foremost, absolutely no virtue penalty. And that how you think about ESG and the contribution it makes to performance follows very predictable patterns relative to normal strategy alignment. So what we find is that, not surprisingly, taking environmental and social governance characteristics of companies and the related equities into account has the greatest impact on performance when you look at long-term, active-oriented investment strategies. ESG makes a very significant and positive difference to performance outcomes of portfolios that look at more mature companies in markets facing a range of ESG risks, where putting ESG issues to work helps you identify companies that have traditional and non-standard risks, and it also intriguingly helps you identify companies that have greater ability to manage risk and equally to recognize opportunities in their marketplaces that can only be realized through having better ESG performance.
We asked Melissa her views on how disclosure levels in Asia have improved over the years, and more importantly, what has been the role of regulators in pushing companies to become more transparent and disclose more.
Well, this again is a pretty positive story, to be honest. We've actually seen a great deal of progress across most Asian markets. Make no mistake, the regulators do play an important role, and that's what we also see globally. Without question, the strongest reporting on ESG issues that we find tends to occur in those markets where the regulators have really insisted on disclosure, because they regard ESG issues to be fundamentally aligned with the type of material information that investors need in order to make good decisions about investing. But across the region, what we increasingly see is leading companies, and indeed most of the large caps that investors are likely to look at, now are well into the competence zone. There's of course a spread of behavior, but it's a spread of disclosure and performance on issues that well-trained analysts are highly capable of working with. Some companies give you everything you would ever want, and you can hear a coherent strategy articulated from top to bottom of a company and across the board. In other instances, the expertise is a bit more narrow, and in some instances, make no mistake, sometimes the disclosure is less than you might want. But I generally tend to find that experienced analysts who have awareness of the issues now have more than sufficient information to start the analytical process. And from my perspective, in those markets where you perhaps don't have the abundance of disclosure that investors sitting in Europe, for example, might have, it's nevertheless an opportunity for skilled investment teams to take the information that's available, contextualize across the industry patterns that are now very well established, and to use the information that's available for really a value-added research process where you're leveraging off of the available data and you're really bringing it into a much more focused inquiry, moving from your investment fundamentals, the available ESG data, and really bringing into a much stronger investment thesis, either in favor of a particular equity, or as the case may be, sometimes against a particular equity.
We came to India next. We asked Melissa, what would be the India experience? World over, there has been a combination of push as well as pull factors on ESG investment solutions. For example, in the United States, there is a significant amount of pull from millennial investors who are demanding investment solutions which derive both a societal impact together with generating a financial return. In addition, regulators world over are demanding companies to become more transparent and have more disclosure on issues such as climate variability. What is going to be the way forward in India? This is the question investors are asking. Will it be a push factor? Will it be a pull factor? Or will it be a little bit of both? This is what Melissa had to say.
I think the fundamentals that support the growth of ESG style investing in India are extremely strong. And I also like the fact that if you went down to the street right now and asked people about it, I think there might be instances where you would draw a little bit of a blank.
Right.
But this is a bet that I'm extremely comfortable taking. And I'm comfortable taking it for the following reasons. First, we have a number of leading Indian companies who are actually more advanced in their understanding of ESG than many of the skilled investors. In no small part because a number of Indian investors have not been asking the questions. The progress a number of Indian companies have made has really been driven by global investors. So there's a real discovery factor here. We know from disclosure patterns that leading Indian companies now have some capability of reporting against these metrics.
Right.
At the same time, India is a country where regulatory risks are very, very significant. India is a country where when companies get on the wrong side of ESG performance, whether it's a social issue, a public health issue, an important environmental issue, or a governance issue, that the reaction publicly is very, very strong. These are crucial catalysts around either value creation or value destruction related to ESG. The fact that many Indian investors have a high comfort factor when it comes to talking about complex social issues is also a positive. For a particular investment style to really grow and settle in and create alignment between investors whose capital is at risk, the asset managers who are doing the analytical work, and the companies who are expected to perform, there needs to be an alignment. And I think there's every reason to believe that Indian investors have expectations of companies which sometimes haven't been fulfilled. And that also drives a political and regulatory process. So I like the alignment on the investor side. I like the alignment on the corporate side. But I also very clearly see a scenario where public reaction to the behavior of companies and their public-facing activities matters in a financial sense. And that's a huge opportunity for skilled asset management teams that have an extremely strong grip on traditional financial fundamentals and ESG to put the two together. And I think this is a real opportunity for firms like Avendus, frankly, to show leadership. And I think being early is the best possible opportunity.
So that was a rather detailed conversation where we spoke about not just ESG, spoke about the virtues of ESG investing, the role of regulators, the role of millennial investors. And I think Melissa shed considerable light on the myth that ESG comes with a virtue discount. ESG does not come with a virtue discount, particularly the integrated style of ESG investing. So Melissa is now on our advisory board, and we look forward to her guidance on many of the ESG issues that will come up as we go ahead. I really thank Melissa for her insights and her time on sharing these insights. I thank all of you for listening to this conversation. Bye-bye.